Okay, I think we're gonna get underway here. So good morning, everybody, and welcome to SaskWheat's first Think Week webinar of 2022. I'm Dallas Carpenter. I'm the Communications Manager with SaskWheat. We were hoping we'd be able to bring you our Think Week meetings out to communities in person again this year. But once again, COVID-19 had other plans. So we'll be doing this online again this year. As soon as we can, we'll be out again to meet you in person. But we'll also be continuing these webinars. We think this is a great way to bring great speakers to you who ordinarily we wouldn't be able to see and interact with. So before I get started, I wanted to mention that we have 2 more webinars booked. One more next week on February 3rd. That's Thursday. Clark Brenzel, Provincial Weed Specialist with the Saskatchewan Ministry of Agriculture, will discuss the risks posed by herbicide carryover. So you can go to saskweat.ca and just on the homepage there, just click on the link to register for that. And just as of yesterday, we have just booked Drew Lerner, President and Senior Agricultural Meteorologist of World Weather Inc., who Drew is very, very well known, to speak about the weather outlook for 2022. And that'll be on February 15th at 1 p.m. And so the link is just there again on the homepage of saskweat.ca, and you can click there and register right away. So I just want to mention before we get rolling here that we will have a limited time at the end of the presentation for questions. If you have a question, please type it in the Q&A function at the bottom of the screen and I will read them out. You may also raise your hand and I will try to unmute you to allow you to speak. And I will do my best to get all the questions, but again, we have a limited amount of time there, so we may not be able to do that. But Josh did mention that he will make his slides available after, and so I will put those into a PDF form and I will send those around to everybody who is registered today. So yeah, thank you, Josh, for making those available. So now on to today's speaker. Josh Linville is the Director of Fertilizer for StoneX Financial Inc., FCM Division. Having grown up in Northwest Missouri on a family farm that raised row crops, tobacco, and livestock, Josh brings a unique point of view to fertilizer markets. With 20 years of experience in the fertilizer industry, Josh has operated in roles that have given him perspective on the markets as a North American logistics specialist, a US-based nitrogen producer, and general manager of trade in Melbourne, Australia. Josh and his team, which spans around the world, have been hard at work educating the market on how to use fertilizer markets to not only offset price risk, but also to be able to sell products to farmers well before fertilizer producers realize their physical sales programs. Here to talk about the fertilizer outlook for 2022, please welcome Josh Linville. Josh, the floor is yours.
Really appreciate it, and thanks for having me on here. Sure wish we could do this in person. I'm not a huge fan of doing it virtually. I kind of like the human interaction, be able to see the audience reactions, answer questions and things like that. But hey, it's the world we live in, right? That's COVID. So we got to learn to deal with what we deal with. A couple things before I get started. Number one, like Val said, I'm going to make sure that all these slides are available to you guys. I have a lot of information here, and there's going to be some slides you're going to be like, good Lord, slow down. I didn't get even a chance to look at that. These are slides that are more educational and like world production numbers and where stuff comes from. So I want to make this available to you guys because it shows you how much of a part of the world market that we are. We don't stand alone here in North America. I'm going to get these out to you. So if I flip through something really quick and you're like, crap, I wish I would have seen that, we will make sure we get those over to you. Don't worry about that. Number two, a lot of this information I'm going to share with you is going to be US based. And I don't want you to think I'm a typical US guy where it's like, oh, screw the rest of the world. We're the center of the universe. But for the fertilizer market, North America, it really comes down to the US numbers. And I'm not trying to discount Canada's demand. I'm not trying to discount Canada's part in the marketplace. I 100% am not doing that. But I have to look at the market through the eyes of the rest of the trade industry. And a lot of the sales that are made up in Canada are based on general differentials to the US or to NOLA, New Orleans, Louisiana. So at no point do I want you to think that I'm just like I said, the typical US guy that doesn't think about anybody else but himself. But that's how the fertilizer market operates. And until we start to break that stigma, that's how we have to look at it. Last thing, I want to make sure everybody realizes a lot of times people sit there and ask me, well, where's your information coming from? And what's your bias on this market? I will be 100% upfront with you. We do not have a physical length or short. We do not carry a position long or short on paper. I will not even allow myself to trade fertilizer stocks because I want to try and make sure the information I give is as unbiased as humanly possible. And that doesn't mean I don't get married to a point of view every once in a while. That doesn't mean that I don't get things wrong from time to time. But I'm really trying to make sure we stay as unbiased in the marketplace. I don't have a dog in this hunt, so I try to call a spade, whether it's up or down. I like lower prices. Trust me. Thanksgiving and Christmas with my family was not a ton of fun because my dad and everybody else is sitting there saying, well, what the hell's going on? When are these prices dropping? This and this and this. It wasn't a lot of fun. I still am a farmer at heart. I like the lower fertilizer prices. It makes me very, very upset when I sit there and see grain prices jump. And all of a sudden, every single input under the sun has their hand out and saying, well, I need more. Well, seed prices go up, fertilizer prices go up, grain, everything goes up with it. So I just want you to know from that perspective, I don't have a dog in this hunt. I'm just trying to call the markets as it is. So all that aside, let's jump into it. First things first, every piece of information you are about to see on this presentation is derived from these numbers. These are the acreage mixes that we are using today. These will change. And if you look at some of these numbers and you say, I disagree with that, and I don't think that's right, very, very likely it has something to do with these numbers here. We like to take a conservative approach to demand and build our way into it. We've been using 91 million acres of corn for a while. And this is, we had the University of Illinois saying 96 million acres. We had several other organizations saying 93 to 94. Those very well may be right. I can guarantee you these numbers are not right. But this is the line in the sand that we've drawn. This is what we built our recent demand models based off of. So if there's some differentials that you're seeing versus what we're showing, it very well might be these numbers. So urea, everybody wants to know, how in God's name did we go from May 29, 2020, $182 a ton for a barge of urea down in NOLA? And NOLA stands for New Orleans, Louisiana. It's the most liquid physical market in North America. And so that's what we track. That kind of bases the rest of the marketplace across North America. We went from $182 a ton to the midweek price on November 12th was at $810 a ton. And actually, even this is wrong. On November 12th, a February physical barge traded $833 a ton, but because these prices are published as a week average, the price came in at $810. Regardless, the price was up 315% in just around 18 months. And how did we get there? That's what everybody wants to know. How in the world did we get to that point? And a lot of these factors are going to be the same thing for UAN, for anhydrous, for phosphate, for potash. But just very quickly, let's go through it. The most important one was back here in August 2020. And that seems like a lifetime ago, but this is where it started. This derecho event was huge because before that happened, corn prices were crap. And that's what the market was focused on. Corn prices were like 360, 375. And farmers were just in a foul mood. I was in a foul mood. There was no way to cash flow anything for the next year. Inputs were too high. Grain prices were too low. Nobody wanted to talk about anything fertilizer. All of a sudden, it got windy in Iowa and Illinois, and we lost a lot of very, very important high-yielding acres. And the price of corn went from $3.75 to $6+ a bushel. What does that do for you from a fertilizer or from a farmer standpoint? You go from I'm not going to buy a single pound of fertilizer to holy crap, I need to maximize every freaking acre I have to have. I need to grow every bushel I can. And that would have been great on its own, but there was still the issue of cash flow. Still got to go to the bank, still got to do this, you got to do that. At the same time, the US government sent US farmers COVID checks. Guys, these things were massive. All of a sudden, not only did you change the reward to be very, very good, you gave the cash flow to do it. Our demand before the derecho event was next to nothing. And the market was flat-footed. And all of a sudden, it was just a massive spike. You don't go from no demand to bigger demand than you normally see overnight like that and not having to have an effect. And since then, it's been playing catch up. February, it got cold in Texas and you would have thought the world ended. But to their benefit, I mean, to their extent, they're not used to it. It doesn't get that cold, and it did. And natural gas prices skyrocketed. And what that meant was that North America production either had to shut down because it would cost too much to produce it, or they had to shut down because they wouldn't get the natural gas flows that they normally would because they were shipping it to the residential. We lost a lot of production right before spring season, and that was devastating. We had a huge spring season. We dropped these inventory levels down to next to nothing. August, Hurricane Ida. Guys, this hurricane, 40 hours before it hit landfall, wasn't supposed to be anything more than a freaking tropical storm. When it hit shore, it was the strongest hurricane we had seen since Katrina. Now, luckily, there wasn't a lot of damage that happened to the production plants down in the Delta, down that NOLA region. But they lost power, and they lost it for a while. There were several weeks of production downtime. Same thing with the logistics. There's a lot of damaged barges. There's river restriction. That storm did a lot of damage down there, and that's a place you don't want to have damage. It's too important to the fertilizer complex. Summer, corn prices continue to stay high. We had a big drought in the upper Midwest. COVID. We still have COVID, but once we got to the summertime, summer of 21, we started to learn how to work with it, to live with it. And these plants, the nitrogen plants, are very high pressure. They're very high temperature. And so you've got to repair them, or else they're going to go down on you, and it's going to cost more and it's going to take longer. So finally, we got to where we could work close together, and we had to turn them all off to make these repairs at the same time. We lost more production. And then the world crap started. So supply chain issues. An Arab Gulf vessel going to NOLA, New Orleans, Louisiana, for a 40,000 ton ship is usually $15 to $30 a ton. It skyrocketed to $80+ a ton because of inability of vessel, or lack of availability of vessels. EU, we've seen what's going on there. Their natural gas is normally like $4, $5, $6 an MMBTU equivalent. It has just jumped all the way up almost to $60, and now it's been floating anywhere from like mid-20s to mid-30s. That caused some plant shutdowns. China, we're going to talk a lot about China today because they are very important to the world complex of fertilizer. Their government came out and basically said, we are banning any nitrogen exports and phosphates as well through June of 22. China normally exports around 5 to 6 million tons per year. And all of a sudden the world just lost it. That's a lot of supply hits. And then India, all of a sudden, they were dealing with their own production issues, supply shortfalls. They were buying all the time. Their demand is big. And then Russia's doing the things that they're doing. If I went back in time, back to July of 2020, and I got on the call with you guys and I walked all the way through all the things that were about to happen over the next 18 months, you literally wouldn't listen to another word out of my mouth because the number of things that have happened is ridiculous. This kind of stuff doesn't happen. This is how we went from near record lows to near record highs. But what's happened since Christmas? We have, on December 22nd, a barge was trading for $765. And in fact, back it up a little bit. November 12th, 2021, a February physical barge traded at $833 a ton. And it has been massive volatility since that day. And we're down and we're up the next day, and we're down the next week, and we're back up the next day and down the next day. We had seen over $500 of volatility, USD, in NOLA, New Orleans, Louisiana, since Christmas. If you back it up to November, it's closer to $600. Now, I say volatility. If the price drops 100 and goes back up to $50, that's $150 worth of volatility. But the net result is that we've seen over $500, almost $600 worth of volatility since middle of November. And the net result is that prices have dropped 42%, or about $350 a ton USD. It is unprecedented volatility. I've never seen anything like this in my 20-year career. And I've talked to people who've been in it longer than me. Same thing, never seen anything like it. So this is looking at that NOLA urea price history, just to give you a sense. When we were up here, we were doing our December presentations and looking through the market. Guys, I called it wrong. I thought these values, I thought we'd dip back, but I thought we were going to kind of trend here, stay kind of up around this $700, $800 range. It is mirroring very, very closely to what happened in 08. Whether this continues or whether we find a floor at a higher level, I don't know right now. More of the market is trading from an emotional standpoint than it is from a fundamental. And that's the weird thing with fertilizer. It's a bit of an immature market. Sometimes when emotion takes hold, fundamentals be damned. And that seems to be occurring today. Internationally, from a North American standpoint, we didn't quite hit the all-time high. International blew right through it, but international is coming off as well. The steam is off. All of a sudden, all these crazy events are no longer happening week after week after week. Sellers are out there, they want to sell, they want to get everything they can at these kind of margins, and the prices are falling off. This is a very, very important slide. This looks at the NOLA price versus Arab Gulf delivered. I'll show you why Arab Gulf is so important in the North American marketplace, but every price tells us a story. It doesn't matter if it's grain, it doesn't matter if it's fertilizer. There's a story there to be found if you know what to look for and if you understand how to look for it, if you can figure it out. Sometimes you just can't figure it out. But anytime we are a positive price to the world, to Arab Gulf, we are effectively raising our hand and saying, ship tons here, we need them. Anytime we are a discount, we're effectively saying we don't need tons, we don't want them, we'll take them, but we're not going to pay as much as the rest of the world. It disincentivizes people to bring stuff here. Well, we had a big dip during last summer. We were sitting there saying, we don't need it, we don't need it. And all of a sudden we went to a premium here. This is important right here. But since that point, we have gone to a major, major discount versus the world. I never thought these values we'd be talking about were cheap, but dang it, we were cheap versus the rest of the world. We didn't go nearly as high as they did. But where we normally follow these seasonal patterns, we've blown this out of the water. And the reason is, and again, I'm going back to the US side, but this is what the market's focused on. October imports are normally 335 to 340,000 ton. We brought in 628,000. We thought, okay, that's fine. Go back to this. We were a premium to the world. We called on those tons. That's on us. We thought November, it takes 30 days to get here. By the time we were through October, we were discount to the world. We're not going to see very many come in November. Guys, we're normally 300,000 ton in November. We brought in 743,000. That is a net year to date, July 1 through the end of November, of 2.4 million metric ton. Double what it was last year, nearly double the last 3 years. That is why when we go back to this slide, this is why this is so cheap. North America is currently trying to tell the market, stop, we don't want any more. Quit sending it here. We've got too much the way it is. We're way ahead of schedule. We don't need anything. The narrative has shifted and we're no longer seeing these crazy events. And the market is more focused on the bearish side than the bullish side. And just to give you a sense of how many more imports we've got versus the last several years, December, I don't think it's going to be nearly as high as what November was, but we're still going to be ahead of schedule. There's no doubt in my mind. And that's probably going to continue through January and February. So looking at, this is an S&D. You can look through these numbers later when I send it over to you, but there's two things I want you to look at. Number one is this 5.687 number right here in the yellow, second number from the top. This is what we believe we need to import today through the spring, so through June 30, in order to meet our needs. And you guys are a part of that. This number isn't right. This number is going to shift. We could see more production downtime. We could see more demand shifting to urea because it's so cheap versus UAN and anhydrous. But this right now is our goal. This is the number of imports that we need. And we've already well ahead of schedule. We are going to blow through this number. And that's what the market is worried about. But the second thing I want to show you, if all of this plays out, the production numbers there, the import, the beginning inventory, domestic demand, we end with this 335. That's 335,000. That is a very small number to finish the spring season. If we see a massive shift in demand to urea and all these other numbers above stay the same, you're going to have an oh crap moment in the marketplace because we don't have a lot of excess. And you're going to see this across the products. We have learned to deal with very, very low inventory, extra inventory out there. Years ago, we had tons of stuff sitting around. So if you driving down the road in a pickup truck, you hit a pothole, you had shocks on the truck. You're okay. You're comfortable. You don't hardly feel it because you've got that built in. Guys, right now we're driving and we're sitting on a frame and there ain't a shock to be found in the truck. You hit a pothole, it is going to be felt immediately and violently. This is something we're watching. I'm not saying this means prices have to go up. If there's a big shift, we've got to open our eyes to it. This is looking at the net production plus imports minus exports. Again, showing you how far ahead we were on supplies versus where we normally are. This is why we have been racing to the bottom. We've got too much. The market is trying to stop. If it is successful, December, January, February, on shutting down those exports and the jury's still out, we will go into March, April saying, oh crap, we overdid it again. We shut off all the imports and now all of a sudden we got to play catch up. Now we got to get back in line with the international market. Now we're back to being a world player. This one gives you a sense of where the product comes. And again, these are for US numbers, but it gives you a sense. Almost half of our tons come from the Arab Gulf. They are a very important player. They are a very important party for the North America urea marketplace. What happens in the Arab Gulf 100% matters to everybody up and down this continent. Russia, 15%. You want to, if anybody's sitting there trying to tell you, oh, the Russia thing on Ukraine doesn't mean anything to us, guys, 15% of our imports come from there. If we get into a war with them, I'm not saying we will, it's a very low likelihood, but if we do, and they both start to exchange, and all of a sudden the free world sits warships outside Russian docks and says, if a ship leaves your dock, we're going to send it to the bottom of the ocean, we'll lose 15% of our imports just like that. What's been going on? Again, COVID delays. It's not just a North American situation. Plants around the world shut down because they had to catch up from the COVID delays. European natural gas prices are sky high. And now, right now, it's closer to this $25, $30, but ammonia is still costing them $1,000 to $1,200 a ton to produce. That is their cost. They are still struggling over there. China banned the exports, just to give you how big of a chunk of the world market they are. These red lines over here, that's how much they are of the overall world trade flow. It may look small, but when you check out this big of a chunk just out of the blue, it takes an effect. It reduces the supply very, very quickly. Russia, we're focused on them. Why? They're 15% of the US imports. Guys, they are 14% of the global export total. Of the 52 million tons that is traded last year, they accounted for 7 of it. If we cut them off from the world, if we cut their 7 million tons out of the market and demand doesn't change, you better believe prices are going to reflect that. Now, I don't believe that is going to happen, but it's something I'm watching. I'm actually more concerned that they get into a little tiff and they shut down natural gas flows to Europe. And if that occurs, like right now, European production has still been going strong because the other other products they produce and things like that in the plant are enough margin they can continue to go. But that's only if they have natural gas. If Russia shuts the pipeline off as a retaliation point and supplies get really, really low, European governments are going to have to make a decision. Do we give the natural gas that we have to the citizens, or do we give it to the industrial complex? And 100% of the time, they are going to give it to the people. I'm more concerned that happens. Still a low probability, but something I'm watching. This is, you guys might have seen this on Twitter if you follow me there. I look at the value of the grain versus the fertilizer, because I think it's a better story. If we just look at the grain price, we just look at the fertilizer price, that elicits emotional response. The fertilizer can never be low enough, and the grain can never be high enough. But we start looking at it from the perspective of, well, what's the differential? How many bushels is it taking to pay for a ton of, in this case, urea? And that starts to tell you how high or how low. And let's face it, you're a farmer. You want to keep more bushels. You want to spend less bushels to buy your inputs. And so looking at it from that perspective, very quickly, we get away from the flat price discussion and we start to see, are we high and low? And guys, we are very, very high. Even with the correction that we have seen, we are still extremely high versus recent years. And this is just looking at it since 2016. This is where we've been since 2005. And don't get lost in the spaghetti plate that's down here. That's a lot of numbers. I don't expect you to pull anything from it. That's just to give you a sense of how high we were coming out last year and where we are right now. This big red line is where we're sitting right now. I'll update these numbers again tomorrow. We'll probably be lower still, but we are still higher than what you see as the average. You are spending more of your hard-earned bushels than you are used to doing. And I've actually started building this. I've got a new analyst on. He's doing it for canola. We've got it for beans. We got it for wheat. We're going to start building that out for a lot of different products. If there's something you want to see, let me know. Like the canola is going to be based on Canadian currency. It's going to be metric ton. We're going to try and make it to where it's something you can use, not something that just feels good to us. So I don't like sitting there showing a graph that says, hey, here's where the price has been, up, down, and here's a dotted line, and I think it'll be here. If I knew it, I'm still giving this presentation, but I'm doing it from my beach house in the Caribbean. I'm going to let you know a little secret. I don't have a beach house in the Caribbean. I don't know where stuff is going. The people that show the slides don't know where it's going. It's just an educated guess. What I like to do is sit there and say, here's the things I'm watching that can push the price higher, and here's the things that can make the prices go down. And when I look at the global S&D, I still continue to see it where it's on the tighter side through the first quarter. If we start to see that demand pop up, that could set a floor and start to push the price back higher as you see the producers start figuring out, oh crap, there is a place to go with stuff. But where is it? We haven't seen it yet. When is it going to come forward? The big thing for me, and I'll highlight the ones here that I'm watching the most, and it's the differential between anhydrous, UAN, and urea. When I look at where urea is today and how cheap it is versus the other two products, there is a major possibility we are going to see a lot of demand flow from anhydrous and UAN to urea. We could underestimate what our demand is, and that could shock us when it all comes down to it. And then same thing, NOLA continues to be a huge discount to the international market. If we all of a sudden figure out that North America needs more tons because the demand has shifted, yada, 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 and we've got to connect back to the international market, we've got some work to do. Flip side, there are a lot of acres across the continent right now that are on the edge of profitability. And when you get to that point, if there's any sort of a slide in the grain markets and it goes to red, you switch and you go to something that isn't as risky and not cash intensive. You go to soybeans, you go to things like that. So we can lose our demand very quickly there. Fertilizer, it's a very emotional product sometimes. And right now, this is playing out. Emotional trading sometimes beats fundamental trading. And then weaker than expected international market. Listen, what if China changes their course? What if all of a sudden they become a net exporter? What if we've been overstaying with us? The demand is here in Brazil and India and Europe. We don't always get it right. So these are the things we're watching. And then just to recap it, what I'm watching mostly going around the world, and the two biggest things is China re-entering the export market. That could change things very, very quickly. And then North American production. Guys, if we have another Arctic blast like we did last winter, that's going to have a big impact very quickly, especially the further along the calendar we go, because it gets harder and harder to replace those tons. UAN went NOLA from $117 US to $562 on December 9th. It's kind of held steady since then. That is almost a $400 or 400% increase in 17 months. Since then, it's been crickets. And why is that? Urea is produced all over the world, and there's tons and tons of producers out there, and it's a massive, massively traded product. There's no way that one party can control the urea marketplace. But look at UAN. When we start to look at it, and we are at all-time highs. I'm sorry if I don't break out the party hats. I'm not real thrilled about where we sit today. And a lot of the same factors have got us to where we are today. But I start looking at stuff like this, and I'm like, I'm really worried. This was Thursday. This is actually higher now. When I look at how big of a price the UAN is, I'm like, something's got to give, doesn't it? But not necessarily, because actually, let's skip ahead here. This is looking at US UAN capacity. One producer controls half of it. And then you start looking at, we're talking 5 of the producers of UAN in the US marketplace control over 90% of the production. It's a lot easier for them to hold their price. And if I'm putting myself back in the trader's shoes, I'm putting myself back in the producer's shoe. If I drop my price today, I'm probably not going to sell another ton of product, but I will drop the market on its head. But what if I wait? What if I've got time to wait? What if I can wait several weeks down the road? Maybe the grain markets continue to rally. Maybe the demand comes back. Maybe there's production downtime. Maybe. If you wait on dropping your price, you at least give the maybes a chance. And if the producers are as well sold as we think that they are, and we're starting to hear some reports that maybe they've got some stuff they need to move quickly, it'll be a matter of can they do it quietly or not? Can they keep the UAN market as high as it is with urea as cheap as it is? This tells me no. This tells me there's going to be such a massive flow of demand from UAN to urea that it's going to be unprecedented. We've never seen anything like it. Not to say that won't happen, but this is a lot of pressure on the production side. I don't know that we see a lot of movement, anything changing on the pre-plant, but side dress, who knows? Again, looking at supply demand, the only number I want you to pull out from this one is this 566 on the bottom right. That's another very, very small ending inventory number. If there is a massive surge in demand for UAN, the product is not there. The excesses are not there to take care of a lot of switching. So big question, gosh darn, sorry about that. The anti-dumping duty rate, I was actually hoping we'd find out what that was this morning. I could talk to you about it, but we don't. We know that we got the countervailing duty case. And this is, again, this is a US thing, but unfortunately, Canadian farmers are along for the ride because we're all kind of one happy family. Dysfunctional family, but still happy. I don't know what the rates are going to be. The countervailing duty, the one that was discussed here several weeks ago, that was the stronger case, and those rates came in very, very low. The rates against Trinidad was like less than 2%. The one against Russia was less than 10%. I think the anti-dumping is a weaker case. I think that was almost thrown on just for the heck of it. And I don't think that these rates are going to be very high. I think they'll be less. And that means that we're dealing with a situation where this could be a non-event, but we don't know. But what we do know, why did CF target Trinidad and Russia? 80% of the imports come from those two nations. If you can lock them out of the marketplace, you basically control the US. And why? Here's all the production around the world. US and Canada, guys, we are about 50% of the world's capacity. You knock out Trinidad, you knock out Russia with the duty rate. Western Europe, Central Europe, Eastern Europe, these areas are not going to export UAN because of how tight they already are dealing with their natural gas situation. You start going to the rest of the world, North Africa, China, and the rest of the world, there's less than 500,000 tons of exports that's remaining out there. If you can knock these two bad boys out, you control your home. That's why they targeted them. And Russia is a big deal for the marketplace. Like we said, I think what 14% is what they are when it comes to urea. They're a quarter or more, 25 to 30% of the global UAN export flow. If they get shut down, guys, it's a very, very big deal. Go back through these numbers. If they shut off natural gas to Europe, look through all these 8%, 12%, 3%, 4%, 3%. You start adding all these up. These are big numbers too. Russia, Ukraine matters to us. Unfortunately, I wish it didn't, but that's the way it is. Ratio, I'm not going to spend a lot of time. It's just really high price. It sucks. I don't like it. It's higher than anything we've seen since 08. Doesn't make a person feel good. It's a very, very high price. What are we watching going forward? Bullishly, it still looks like supply demand is looking pretty good. Producers are fairly comfortable. Not to say it couldn't go against them, but right now they're looking okay. If the anti-dumping part of this case comes out and it's a very, very high rate, now all of a sudden we got to worry about crap. Where do we get imports coming from? This could be a big one. Same thing, if demand surge, I talked about how there's very little carryout going into summertime. If there's a big surge of demand on UAN, where are we going to find that product from? Flip side, you better believe there's buyer resistance today. You guys are probably sitting there saying, yeah, no kidding, Linville, I get it. These kind of prices, the world shuts down, the demand shuts down because it's like, screw it, I'll wait, I'll see what happens, maybe prices fall. If that happens long enough, maybe that puts pressure. What if the anhydrous run is better this spring? We're not expecting it to be very big. We need a perfect weather window to get better than what we're expecting. But if that happens, and with urea being as cheap as it is, it's going to steal demand away from UAN. But the biggest thing is that urea price destruction. It is such a discount today on replacement, and you probably are not seeing it yet because, again, you look at how long it takes for product to get from overseas to here, and then you got to get it from here up through the river system, then river system up on the truck or rail and get it to you. It takes a long time to move it from point A to point B. Eventually, this is going to flow down. It's just going to take a while to get it working. But urea is showing a lot of destruction, and that's going to weigh on the UAN marketplace. So my biggest thing, urea, if that slide continues, we got to watch out on the UAN side. Flip side, if there are any sort of production hiccups, if there's another Arctic blast, we change the narrative very, very quickly. Ammonia, it's the same thing. I cannot tell you how many times I have checked this 1071 number to make sure I haven't completely screwed it up. It is 100% right. The price of the anhydrous has gone up almost $1,100, almost 400% in 15 months, from September 320 to December 921. But since that point, it's been crickets. It's the same thing as UAN. Producers know if they drop the price, they're not going to sell anything more, and they're going to drop the market. But if they hold on, they know they are very, very comfortable. The market is not designed across the U.S. to get refilled after a massive, massive fall. And that's what we had. We emptied the system. There is not enough logistics out there to get the system refilled. And they're basically saying, I don't care if I lose demand to urea. I don't care if I lose demand to UAN. Do it. I can't take care of the demand as it is with the supply. And so the market stays steady and it's very, very quiet. Same factors, except the huge fall run actually is more of a bullish point than is bearish. A lot of people think, oh, the big fall, there's nothing left. That's not the truth. Price history, going back to 2012, and where we're at is record prices. I don't have it back to 08, but they are the record prices since then. Direct application. You start to notice here, these yellow boxes down here, the 2.3, that's 2.3 million ton that we believe got applied in the fall season. This is actually quite a bit higher than what we had originally forecasted. But the total 4.05 over here, that's the same. We haven't changed it. We've just taken away from spring and added it to fall because we don't think we get enough supplies in place. If we beat this 4 million ton number, now all of a sudden we're talking about stealing demand away from UAN. Like I said, prices always tell a story. This is something that if you guys follow me, where you're going to see this a lot more going forward. This takes the NOLA urea price on a price per pound of actual N, because that's what you care about. And it looks at the Western Corn Belt anhydrous on the price per pound of N. Now, back here, when we were big up here high, we started talking about anhydrous is cheap. This is when I made the statement I told my dad. Once you drop that toolbar into the ground, that tractor seat better never go quiet or never go cold. You better run 24 hours a day. And if that means you need to run during the day and I need to get my butt out of the office to go run that tractor at night, do it. Because we are so far cheap versus the other nitrogens. You've got to get it on. And sure enough, that's what happened. That price climbed all the way through fall. Well, it was trying to say, bring me demand. I need to clear all this stuff. And it did that. Guess what we're saying today? Anhydrous is actually a premium product of urea. It is actively sitting there saying, I don't want your demand. I want you to go somewhere else until I feel comfortable from a production point. But this is telling us a story that production, frankly, doesn't give a crap. We're more than happy to wait out, see what happens. I don't need your demand today. UAN, because it hasn't reset, it's still kind of in line with the last few years. Nothing stands out here. But if UAN does start to jump, start to fall, well, all of a sudden anhydrous is by itself, and we need to watch that as well. Ratio is bad versus last few years and bad through every year that we have. So going forward on the anhydrous side, the huge fall application will continue to be a win for the producer, and the producer always wants higher prices. That's how they make their money. As long as the inventories are low and the demand is high, they are going to continue to press the higher price narrative. International markets continue to hold high prices. Europe is struggling to produce. They're struggling to keep these plants on at the high price of inputs. The Tampa price just got set for February. It's another 20 bucks a ton higher. The world is staying high. And then the demand continues to look there. We're not showing any sort of a big decrease on demand going into this 22 application season. Flip side, price goes down the corn, whatever, yeah, that's going to hurt. But this one right here, urea on its own cannot bring down anhydrous because it's still got UAN as a high price partner. But if UAN falters, anhydrous is going to go right with it. That's something we were watching. That could bring the whole thing down. It's a house of cards. And then flip side, if we just can't get out there in the spring, if it's a wet, cold start to spring, and we can't get, anhydrous can be free, right? And it does not matter. If you cannot get that tractor in the field, if you cannot get out there, you're not putting it on the field. It just doesn't happen. So 100% what we're watching, this is the single biggest one. It's weather. It's always, always, always weather. When I was at Cope, I would put together S&D models and emails and stuff like that, and they were all worthless because everything ended with weather permitting. That's the biggest single factor when it comes to that marketplace. Phosphate. So this one started to party. Back in May 22, prices were 257, and they've rallied to 745. Since that point, though, prices have fallen back to 665. Prices are almost $100 a ton lower than where they were at the high. And a lot of that has to do with the reason prices got so high is because we ran the market out. You go back to that derecho event. We went from no demand to clearing the system out, and we have been playing catch up ever since. When inventory levels are this low, producers know it. The mosaics of the world, they know it, and they use that to their advantage to push prices higher because they know there's plenty of places to store stuff. There's plenty of places that need to buy. They just need to be patient and wait for that panic buying to happen. That's a big win for them. But a lot of the same factors are helping phosphate as it did on the nitrogens. Mosaic's countervailing duty case, this started the whole thing. This is what happened back during the summer 20, it was June 26th of 2020. This started, but really it's more of a world issue than what people realize. China started slowing down exports, and they are the biggest single producer in the world. Derecho event, of course, the demand went from next to nothing to huge. COVID checks meant that demand could be met with actual spending. We ended up with very, very low levels. And then China came back. The Chinese government said no more exports of phosphate or nitrogen through June of 22. Whether they do it all the way through then, we don't know. But we know that's something we have to factor in today. Grain prices, they can be higher. Trust me, I'm all about higher pricing, but it's still very, very good. And then we're seeing major markets around the world like India and Pakistan. They are continuing to buy whatever they possibly can at whatever price possible because they are desperately low on product, and things work differently over there. The politicians want to keep the ag side happy because that's where all their votes come from. And if there's not enough product in there, if the farmers start to perceive there isn't enough, and we've seen videos of them raiding retail locations, they are riding on the streets from time to time, politicians know they can lose their seat and lose their power, and they don't want that. So we've got an interesting complex here, right? We have got the world market, which is staying extremely high price, but NOLA's been dropping. North American phosphate prices have been dropping. Now, a little bit of the story, Morocco and Russia, we've shut those two off, right? They were two of our bigger importers. Morocco brought in 2 million ton last year. Russia brought in about 1.2 a couple years ago. But since that countervailing duty case, they've gone to next to nothing because it's too high price to bring here. That duty is too high. And since then, we brought in Saudi Arabia. They're a bigger player. Jordan's a bigger player. This one drives me nuts. Love Australia, but they're halfway around the world. When I would step in the airport in Kansas City and step out of the airport in Melbourne, 24 hours of my life was gone. That was on a freaking jet. Imagine how long it takes for a boat to get there. Imagine how much it costs to bring a boat from there. And we brought in 250,000 tons. This move should not happen, but it tells you how jacked up the market has been. So just to give you a sense of how things have shifted from a supply point because of that countervailing duty case. So why did Mosaic target Morocco? Why did they target Russia? This is all the production capacity around the world and all the exports around the world. China already had a duty against them. The US is mainly focused on Mosaic production. Take out Morocco and Russia. India produces a lot, but they don't export. Brazil produces a lot, but they don't export. I skipped over Saudi Arabia. The reason that is because Mosaic didn't ask for a duty against them because Mosaic has partial ownership in that facility. They don't want a duty against themselves. So when you start counting up all these top 7 producers around the world and all the exports that those 7 producers producing countries represent, that's almost 90% of the global capacity and almost 90% of global exports. Again, this is a US driven thing. It's a US government thing. It's our stupidity. But unfortunately, you guys are tied to us. And so what happens to us happens to you and vice versa. This is why so many people are upset. They're saying this is ridiculous. This is monopoly. This is why you're seeing US politicians talk about it and grain associations talk about it. They're saying this is ridiculous at these kind of prices. And the fight is on. Why did they call for it? For years and years and years, US and North America was a major exporter of phosphate. We were one of the bigger phosphate exporters around the world. But we have slowly over time lost that. There's still plenty. A lot of the production is made down in Florida. And there's still plenty of good phosphate rock reserves down on the ground, but they cannot get new permits. They are not allowed to go mine new ground. And why is that? If you guys have been to Florida, you know there are 3 things the Florida government cares about. Tourism dollars from people sitting on the beach, tourism dollars from watching rockets take off into outer space, and tourism dollars from people going to see Mickey Mouse. Everything in Florida is tourism. And when you go to Florida, it's dead flat. You can see for miles. The only hill in the state are the gypsum stacks. It's the gypsum is the byproduct of phosphate production. And it's got a very slight radioactive tinge to it, so you cannot do anything with it. And so they put them in these piles. Phosphate production has taken a lot of PR hits here recently. A couple of years ago, one of these gypsum stacks, it had been raining a ton, and all of a sudden a sinkhole opened up right in the middle of it. News helicopters are looking over the top of it, and they're watching video of the water just racing into this hole. They're like, wow, radioactive gypsum water piles are flowing down into the ground. How do you think that's making its way to your drinking water? Just last summer, a gypsum stack broke open and into the Tampa Bay. Then all of a sudden there's a major red tide. They drew the lines together, whether it's right or not. It's perception, it's public perception. So North America has steadily been losing production and losing access to high quality rock. Well, Morocco and Russia and China have all been stepping up. They're a bigger exporter. They're a bigger player in the world. The US and North America has lost its importance. And all of a sudden it quickly became the high cost producer. And in order to stay profitable, in order to stay in the marketplace, they had to ask for protection. So we've got a NOLA market right now that's oddly going down, as you got a place like India that's paying massive, massive numbers to get their hands on it. With as cheap as North American phosphate is, and it is some of the cheapest, if not the cheapest in the world, we're not exporting anything. We're not shipping stuff to India. We should be. Where we are today at 665, we can be competitive and we can sell stuff to India at 920 and 930. So why isn't that happening? Why isn't somebody taking advantage of that arbitrage opportunity? That would mean higher price to you. You don't want that. I get that, but why aren't they doing it? Phosphate's a hot potato right now. Everybody is talking about it. Again, politicians, grain associations, retail associations, farmers all across the continent are yelling about the price of inputs, and specifically phosphate, because that's the one that started this whole thing. If I put myself back into the trade role, and right now I could probably ship 2 or 3 vessels over to India, and at the kind of margins I could make my entire year in the first month of the year. But I might as well set most of that money aside to pay for lawyers. They can sit next to me as I'm answering questions in front of politicians, as I'm answering questions in front of these retail groups. The spotlight is too hot and nobody wants to take the risk. And so we are kind of trading on our own little island. And that's good. We like that. That means prices are actually down from where they are. But guys, make no bones about it. There's nothing about today's pricing that is cheap. But where we are today and where we are trending, we are some of the cheapest phosphate in the world. It doesn't feel like it, but we very, very much are. Again, talking about Russia, just to give you a sense of how important they are. They are 10 or 11% of the world exports. We have to pay attention to the world. Guys, what happens in Russia matters to us in Saskatchewan. What happens in China matters to a farmer in Kansas. We are a part of the world market. The ratio is crap. Ratio is crap versus the last several years. No shock there. You guys know it. You've felt this the entire time. I don't need to tell you this. Going forward, as long as China stays out of the world market, we have lost our biggest exporter, our biggest producer, and that keeps the S&D tight. Demand still looks pretty good, and we're continuing to watch the Russia situation. If we shut down Russia, that's another big loss to the world. Now, all of a sudden, we've lost two of the bigger exporters in the world. There are still routes forward where our prices start to rally. Flip side, though, 2008 was the last time we saw prices anywhere near where we were today. We did see massive demand destruction. You're probably sitting there saying the same thing. Yeah, I cut my rates back then. There was no way I was going to spend all that money. There's no reason for it. We could see demand be destroyed in a way that we never expected. We could also see China turn around. Guys, I'm here to tell you, when I was in Melbourne, Australia, we had an office in Beijing. Great group of people. I loved them to death. They took me on a tour of China. I got to see several ports. I got to see some production facilities. It was so cool. They got me drunker than I've ever been. I can tell you, if you go to China and they ever belly you up to one of those circle tables and they start bringing around a clear liquid and start toasting to business and friendship and all this stuff, run for the hills. This is the best information I can give you on this presentation. They will drink you under the table like it's a Tuesday. But for all the amount of love that I had for those people, I didn't believe a word that came from them because everything goes to the government. The government controls it and the government can change their mind tomorrow. If I wake up to a report that they're exporting heavily, I won't be surprised. Same thing. If we start to see price of grains or we see acres destruction or whatever, that is going to flip this market and make it even bearish, even more bearish than it already is. So number one, I am watching Chinese exports or a lack thereof going forward. And then potash, very quickly here, we normally don't see a lot of volatility, but we saw the price of a barge go from $200 to $700. Never seen anything like it. Now, since then, it's been crickets. But guys, look at what's happened. Years past, these moves higher and lower would take months or years. This rally is just crazy. We've not seen it, but now all of a sudden we've just gotten quiet. And all the same events. And now we've had a little bit more. Esterhazy lost a couple mines earlier. That was 1 million ton of production that we expected to have that we lost. Belarus is, of course, a big player. Politically, there's a lot of new sanctions and a lot of questions on who will take their product, who won't take it. Russia, Ukraine, of course, is a big deal. Why do we talk so much about Belarus and Russia? Well, we fast forward over here. This is world potash capacity, not production, but capacity. Canada, you guys are the biggest one out there, 36%, give or take. But look at Russia and Belarus, almost 1/3 of the global operating rate. If we cut these two markets off from the rest of the world, you can't lose 33% of the world operating capacity and not have that affect pricing. We have got to watch this region very, very closely. Now, already looking at producer inventory across North America, it's lower than normal. We've been playing catch up, but the producer is still in control because we're lower than what we normally are. There's not as much product sitting out there. And then again, just to give an idea of where we expect our stuff to come from, and that affects you guys as well. It's not a huge percent that comes from Russia or Belarus, but it's not nothing either. What happens in Russia, Belarus happens to us here. But guys, we need to watch the potash demand too. Back in 2008, we ran some numbers, and we think that potash demand was down 40% because of the high price. These ratios are crap. This very well could mean that we have a lot more demand destruction this spring than what we expected. So I'm watching Russia, Ukraine very, very closely because we could lose Russia that fast. I'm watching Belarus because they aren't improving, and there's always talk of more sanctions and this and that. We lose these two regions, we lose a lot of product very quickly. The same thing on the downside, demand destruction like 08. If we lose that much destruction, it's kind of game over. So again, my focus on the potash market is Russia and Belarus. That's it on the presentation side, guys. Two things I do want to say, just to finish this off before questions. Number one, it's very, very easy to get angry with these markets, and you should be, because gosh dang it, it's hard to pull the trigger on this stuff. When it comes down to it, be angry, be upset, do all the things. But when you have to make your decision, do everything you can to make it a calm, level-headed decision for you, not your neighbor, not for your supplier, not for what other people in the region are doing. It's got to be your decision. You are the CEO of your organization. You've got to look at it from that perspective. And number two, and you're probably going to sit there and scream at me for this, have more conversations with your supplier. You talk about the risk, all this risk that we're talking about through all this presentation, they are dealing with it as well. If you're buying hundreds of tons, they're buying thousands, tens of thousands, and they're just as scared as you are. If we just shut down and don't tell them anything, they don't know how to plan. And they're not going to bring the stuff in just for the heck of it. There's too much risk out there. The last thing I want to have happen is that we shut down and say, ha, I got you, prices are going down, but then find out there's no product to buy when it comes to season. And all of a sudden we're dealing with a much bigger issue in the springtime. Try to do away with, emotion, and try to have more conversations. Hopefully we can get through this thing. We can get to next summer. We can normalize this. We can go back to a decent world. We can take some time off. But until then, we've got to be on our game. So, yeah, I'll get off my soapbox, man. Back at you.
Okay, great. Thank you very much, Josh. That was great. We do have 3 questions here. Actually 4, but that one is for me there. So I'll just answer that one real quick. There will be a recording afterwards. If anyone is interested, it's not going to be up on our YouTube page or anything like that. If you're interested, just send me an email and I'll send it out to you. It'll be a big file, but I'll get it to you, and so we'll deal with it that way. The first question here is the spat between Morocco and Algeria affecting any of the North Africa production, and will it affect imports to North America?
I don't think that is affecting production. At least I have not heard anything that's affecting production. And until there is a change, I would say there's no effect on the North American marketplace. Now, if something were to happen and something occurs where North American production shuts down, that is actually one of the big drivers. They have been the driver on the world market dropping. And if all of a sudden they get removed from the marketplace, the rest of the world's going to say, oh, wow, we just got rid of our puker. Now we can get back to normalizing this thing. So that could have an effect, but until I see something definitive, I'd say no.
Okay. The second one here is from Jaron. He says, Josh, aside from selling grain, thoughts on holding stock of manufacturers as a hedge against high fertilizer prices?
Unfortunately, I have looked at those and I don't feel that the correlation is high enough to be an effective hedge. Unfortunately, it might work for you a time or two, but I think it's going to work against you more times than not. It's going to get you more frustrated than anything. We do a lot of the paper market. That's actually where we make our money, is trading the fertilizer paper. We are working really stinking hard to get it to where we can start rolling out to the farm gate, get it to where you guys can use these tools as well. Most of the trade that happens with fertilizer, it's 1,500 short ton per trade. We're trying to get that down to where it's 100, 200 tons, something more manageable for you guys. It's going to take time though. That's why a lot of our focus is on the retail side. Like I said, you guys are dealing with hundreds of tons. They can do thousands, tens of thousands. They can knock off 1,500 blocks. It's a work in progress. I figure I've got about 25, 30 years in the business, and hopefully we can get there sooner than later. But as of right now, I would never recommend that we use the fertilizer manufacturing stock to hedge our inputs.
Okay. Rob Stone asks, Josh, there was a suggestion on a local news report yesterday that the government needs to do something about these prices. Can you comment on that?
I get it, but I don't think the governments can do anything about it. You go back through all those things I talked about it. How we got to where we are really had nothing to do with anything other than just crazy macro events. In fact, there for a while, it wasn't even about fertilizer. It was about energy in general. It was natural gas pricing and this and that and production downtime. A free market, I'm very much a free market person. We will eventually fix it. And we're actually starting to see that happen in urea. And it's going to work its way down to you. It's just going to take time. But maybe a government intervention does something. Maybe it spooks the market into dropping its price. But I think we just got to find normal. We've got to get these production facilities back online for a long period of time. We've got to get to where we don't have these stupid black swan events happening every other week. That's what 2021 is going to be known as, the year of black swan events. It was one after another after another. Now all of a sudden we're starting to get away from that. Now we're getting back to normal. We can get these prices back down to normal levels, or hopefully. But sorry, I kind of beat around the bush there for a little bit, but maybe the government would help, but I don't think it'd have nearly as much as they think.
Okay. Corey Leeson asks, Josh, do you think the U.S. will ever change direction on phosphate mining and start to increase production again?
No, because when you look at it, we measure our phosphate rock reserves in decades down in Florida. Morocco measures it in centuries. They have that stuff. They have so much of this stuff. It's ridiculous that to a certain extent, I think the Florida's just going to say, no, we don't need it. We're going to figure out that, hey, it actually works out better to buy it from Morocco, because Morocco is the US's oldest ally. It's funny. We always go to Disney every January. And in Epcot, there is a Morocco part. They have a world. The reason they do it's a weird thing to have there, but because they were the first country to recognize the U.S. as a real government. We have a very long-standing history. So you believe you got to keep that relationship for a long time. That should be a very reliable source for the years to come. And by bringing that stuff in, you're actually keeping your own reserves in case anything ever happens and they cut you off. So the possibility is there, and the reserves, of course, are there. But I don't think in the short term you see the government changing course. I don't think you allow them to expand their mining.
Okay. We have an anonymous question here. Seems like large crops lobbying government for tariffs on Russia UAN imports is much like price fixing. Do you believe the UAN has to come more in line with urea on a cost per pound basis, currently 30% higher?
I believe that urea has kind of overdone it on the downside. I think we'll eventually see a little bit of a correction back up. But yeah, I believe that UAN is going to get pulled down eventually. I don't know if we're talking a matter of days, a couple of weeks, maybe a couple of months, but UAN cannot stay as high as it is. And as far as the tariffs and things like that, yeah, I'm a little disappointed they even gave them anything because of where the pricing is and things like that. The government, and that's why I don't get upset with Mosaic and I don't get upset with CF. They can ask for whatever they want. It's up to the U.S. government to sit there and say yes or no. It's kind of like getting mad at a rich person for not paying as much taxes as they should. Have they done anything illegal? No, then they've operated within the letter of the law. They've just done that. All they can be told is no. So I'm kind of a little upset with the DOC and the ITC for allowing it to continue, but we'll see what they do. If it's another small one, it's not going to make a lot of difference, I don't think.
Majid asks, in Canada, we produce most of our fertilizer need with logistic problems to export. How do you explain higher prices in Canada?
I'm guessing you mean why are Canadian producers so high priced, even though I've got production kind of in my back door? It's because it's kind of like politics. Follow the money. These facilities were built not for the good of the industry, but they were built to make money. And what they're going to do is they're going to sit there and trail along with the rest of the marketplace. If the rest of the marketplace is $800 a ton, for example, they don't need to be 400. They're going to sit there and sell it as high as they possibly can because they are there to make the returns. I'm not saying it's right. I'm not saying it's fair. I'm not saying any of those sorts of things, but that's the way the market works. They are going to sit there and say, hey, our differential over NOLA, for example, is this. So we're going to trade NOLA plus. We're going to do this plus, and we're going to maximize the profits we possibly can.
Okay. Another anonymous question here. What percentage of the NOLA urea today is making its way up to Canada, if you had to guess? And do you think retails will be able to sell against NOLA, or is the product at these prices limited?
The product at these prices are limited. NOLA, it becomes, for lack of a better term, becomes the sexy number. It's the one we talk about. It's the one we see. But we may see a barge trade at 485 in the Gulf, and that's a low number. My gosh, it's down from this. It's 1,500 ton. In a big day, you might see 30, 40, 50,000 tons trade. But like I said, we bring in 5.6 million ton to meet our demand. What we need to have happen is for NOLA to continue to trade low, put the pressure on the producer and force them to drop their price. That is what we finally start to see it. It's when the producer feels forced to drop their price because they're the one that sells the big volumes. But as far as tons going north, right now, it's very difficult to get to you guys. That upper Mississippi River is shut down. Everybody's trying to utilize St. Louis, which is the furthest north terminal you can get to. There's a crap load of stuff that is staged at St. Louis and Cairo in that region, but it's log jammed. There's nowhere else for it to go. So unfortunately, it's hard to get stuff up to you guys. And there's going to be a rush trying to get it done as soon as everything opens up, but it's going to take some time.
Okay. So we're at 11:30 here, and we do have a few more questions. So I'm not sure if you want to answer those, if you have to go. So we would, I said we would do our best to get things off to you, and we'll be getting our the slides out to everybody, and like I said, we'll be getting the presentation out to those who want to see the presentation again. And so my email, excuse me, is dallas.carpenter@saskwheat.ca. So if you go back into your sorry again email, you'll have received an email from me this morning, just to that reminded you about this morning. So sorry, I don't think we'll be able to get to the rest of those questions, but we had some great questions there. Thank you, Josh, for answering those. That was it was an excellent presentation, and really it was information that we don't get up here very often. So thank you very much.
I just sent you over the PowerPoint to get that sent out to everybody. If you can compile those questions, if everybody can ask them, send them to you, pop them over to me. I'll answer back as quick as I can via email if you want to send it out to everybody.
Sure.
I'm more than happy to do that. I'm sorry we're tight on time, and I want to get everybody answered. I hate walking away and people like, crap, I want to ask this.
Yeah.
If you want to send them over, I'll take care of it.
Great. Yeah, great. Thank you very much, Josh. That's great.
Yes, sir.
And so just a few things before we go here. I just want to remind everybody that there are a couple more webinars here booked. There's one next Thursday, February 3rd. That's Clark Brenzel of the Ministry of Agriculture. He's talking about herbicide carryover, so please register for that. And Drew Lerner, we have him booked for February 15th at 1 p.m. and he's going to talk about the weather outlook for 2022. So thank you very much, Josh Linville, again. That was a great webinar, and thank you everybody else for attending here today. And I'm getting emails like crazy, so I will get the slides and the video of the presentation out to everybody as soon as I can here. So thanks again.
Thanks, Dallas.
Thanks.